Hello and welcome to the Monday Futures Market Outlook for March 7, 2011. This is Patrick Ceresna. For those of you that have not had the opportunity to try out the eMiniSource.com trading room, 5-day complimentary memberships are available. As always, we start off with a weekly chart of the S&P 500 going back 3 decades, and we plot an 80-week moving average on there. It does a very good job to depict the bull and bear market cycles that we've gone through. We bullishly crossed above that 80-week moving average back in 2010 and has stayed above there since. We've had this last leg of the rally that we've been pushing our upside targets for this swing high coming around the 1350 to 1380 level on the S&P. We believe at that stage off of these levels, we should have a profit-taking cycle that could be even 10% or so in duration. After that, the market may still have another push to even higher highs, if not retesting of those highs. But for now, we're just looking for some sort of an intermediate market top and some form of a profit-taking cycle that could last weeks or if not months in duration. When we take a closer look at that S&P 500 on the daily charts using the E-mini futures contracts, we continue to have the sideways consolidation between the 1300 to 1330 level on the upside. Really at this stage with the supports level holding very well at this 1300 level off of this consolidation, where we cannot rule out the possibility that even the S&P 500 still makes a little bit of a higher high, as we may see a short-term pop to any number of upside targets. We've already met the 1330-32 area, but really at this stage we could see 1340, if not even 1360 or 65 on the upside as the S&P goes and finishes some of those upside moves. But eventually we believe that this still is one very big topping formation that will be contained to the upside of this blue box. Really, more than likely off of that level will come another sell-off that will come back and test the 1300 level. In the bigger picture, that may end up being something like a head and shoulders formation. It may end up being a double topping formation. Overall, we think it is a topping formation we're seeing, so we can't rule out a break to a higher high in that process. But we're not optimistic about too much more upside until we have a good, healthy, profit-taking cycle. Just to review our key points, we have an intermediate bullish bias, but we're now within a few percent of our upside targets for the year. There continues to be momentum loss and a lack of market breadth, and the rally is purely going on the back of large caps and now energy stocks. We anticipate that market top somewhere within this 1340, 1380 area, but it may still take weeks, if not a month or more, for a topping formation to form. One of the things we are looking at is that we could very well be talking the same theme come April 1st, as the market really made no progress higher nor made any breakdown move lower, as we sort of chop in this entire area for even another 2-3 weeks. Eventually, we do believe some form of profit-taking cycle will bring the S&P down towards about the 1200 level, or about a solid 10% market correction. Next here, I want to take a look at the E-mini NASDAQ 100, and the NASDAQ is in a similar situation. If we have an S&P that attempts to break toward those higher highs in that on the upside, the NASDAQ we certainly can't rule out for targeting the 2450, or even if it's really got a lot of momentum, 2500 on the upside. In the bigger picture, we don't think that there will be a lot of momentum behind any bullish break higher beyond a couple of very good solid thrusts, and subsequently the profit taking should ensue afterwards. But at this stage, we cannot rule out still a little bit higher highs on that NASDAQ. Next year, I want to take a look at the U.S. dollar index futures, and we see after that flag break that this is now continuing downwards to the target of the previous lows at 75.50, 76 on the downside. There are some measured moves in that dollar index that head as low as the 74 area. In the bigger picture, we actually believe the lows of the dollar will come in somewhere in this zone. But just like the market it needs a topping formation, the dollar index will need a bottoming formation, and that could again be a prolonged process that could take almost the entire month of March we first have to even find the low point before we can start a bottoming process. And eventually there will be that sector rotation. Will be spurred on by a U.S. dollar rally, but it's too early to speculate at this moment where that low will come in. We'll be initially just watching the 75.50 area where the previous lows came in as a support line. Next here, I want to take a look at copper futures, and copper continues to work its way back to its previous highs. Overall, we do believe copper will also be creating a topping formation about the same time as the dollar index is bottoming. Overall, this may end up just being a retest of the previous highs. We can already see some stalling price action there, but if the U.S. dollar in any way deteriorates down towards this 75-74 area on the downside with a very emotional finish to that selling, then we can't rule out that copper will gun for 480, 500 on the upside, which was our 2011 upside target for copper in our most optimistic forecast. Really, in the bigger picture, again, only short-term optimism if the U.S. dollar weakness is there. In the bigger picture, being long copper is a very poor risk-reward proposition for any intermediate period of time. For a short-term trade, it certainly has room to go. Next here, I want to take a look at gold futures, and gold had a little bit of a consolidation last week and then a very strong bullish break higher. We now have gold breaking to new highs. That bodes well for gold, particularly by the weakness in the U.S. dollar, which naturally helps gold appreciate as it's priced in U.S. dollars. With this bullish breakout, so long as that U.S. dollar continues to deteriorate, we could see gold upside targets even as high as 480, 520, and even 560, 580 on the upside. Really, I would be siding on the lower targets as opposed to the higher ones, simply observing the measured move targets on the upside. But so long as there's a U.S. dollar weakness, we cannot rule out the possibility that gold will continue to advance towards some of these upside targets. Next year, I want to take a look at E-mini crude oil futures contracts after last week's support holding in around the 96-97 level, which we've now made a focal point. We had a nice melt up on oil. Some of the measured move targets on the upside are aligned as 108 to 110, as well as the 113, 115 areas on the upside. But measured moves are marginalized during melt-up periods, where if there's a lot of emotional money flowing into crude oil, it can certainly even exceed those types of upside targets during a melt-up sequence. Overall, we do believe that this will be a short-lived at some stage. There will be a very good correction in crude oil back down, but speculating when and how that will begin is too early. At this stage, we first need crude oil to finish its moves so we can see where the tops could develop on crude, and then we'll see how the reversal patterns could develop. The whole process again could take the entire month of March. So really, at this stage, let's just see where crude oil hits on the upside targets from here. Finally, I want to look at the 30-year Treasury notes, and we have a sort of a sideways range-bound level on these Treasury notes. But so long as that dollar's weakening and we have strengthening in the broader markets, then we certainly cannot rule out the possibility that these Treasury notes go for a double bottom retest around the 117 handle, if not make it lower. There are some measured moves that target even as low as the 114 area on the downside. And while I don't necessarily believe that we have to go down to that level, we can't technically rule it out either. My first suspicion is that this is a bottoming formation, which means that 30-year Treasury notes should maybe come back and retest their lows and then work their way back up to the top end of the trade range as we begin a bottoming process on these. That was your Monday Futures Market Outlook. Thank you for joining me.